Hey guys, welcome back. Drip and Power and Poor Poverty. I'm your host, Drip Coach, dropping knowledge bombs on all drip ecosystem related projects. And if you're new here, don't forget to smash that like and subscribe button and turn on notifications so you don't miss a video. Now, this is the weekly wrap-up video, so I'm going to try to keep this short. It just covered kind of the latest and greatest in the news for this week. And we kick things off first with a blast from the past. And if you've been around long enough, then you remember Mt. Gox. And if not, they were the first major cryptocurrency exchange that filed for bankruptcy back in 2014 after a catastrophic hack. Well, new updates reveal that the US Department of Justice has charged 2 Russian nationals for allegedly being behind the infamous threat. So we're seeing a lot of US political influence, I guess you could say, that will be in this narrative for today's updates. So I'm not even going to try to pronounce these guys' names, but 2 guys have been accused of conspiracy to launder the colossal sum of 647,000 Bitcoin they allegedly stole through the hack of Mt. Gox servers. Authorities believe they did this from 2011 to 2014 and then tried to sell the Bitcoin through an exchange they controlled. They even allegedly entered into a fraudulent contract with a Bitcoin brokerage firm in New York to sell the stolen Bitcoin. Now, if you're thinking this doesn't affect you, think again, because this kind of news shapes the narrative around crypto security and regulation. And it's my job to help keep you informed of the community and to push the transparency and accountability. Because when stuff like this happens, we see all sorts of things take place in the regulatory front, which leads us over to Robinhood. So Robinhood has decided to end support for the tokens named in the SEC lawsuit. So ironically, Robinhood was not even listed in this at all. They weren't even mentioned. They're like a fly on the wall, but they have decided to delist 12 of those tokens. And then we see all of those are the ones that are actually down tremendously for the week. So we saw Cardano take a 30% hit, Solana take a 27% hit, Polygon 32% hit, Shiba, I think that was actually still listed, to be honest. But it's a lot of these tokens that, yeah, you wouldn't have thought would be listed as securities, but they are. And Robinhood, we know, is kind of a, we'll call them a foul player. Like, they play primarily for the Wall Street side. We saw that with the GameSpot stock, man, that's hard to say. And the whole ape movement that got shook out a couple years back. So this does not surprise me one bit. And I would not be surprised to see that some of the Wall Street money move into some of these exchanges or tokens that they are kind of now trying to cause a bank run on. But I digress, because we don't know how it's going to play out. But if you look at history, you know that capital money is dirty money for sure. All right, next up, we move over to the present. And we come back to the recent article that started all this. It's the Binance SEC lawsuit with Coinbase. So Binance has a lot more allegations and mud being thrown at them, but we have seen this coming, and they're reaching all the way back to 2019 with this. There's some, what do you call that? Gary Gensler, I guess, had applied for a job and was turned down. So he should not be able to even preside over this case or submit this case because it's a conflict of interest. But either way, it has now been brought to light, and that has caused some but Binance is fighting it. And then you have Coinbase, who also was lumped in and basically just being not charged with some of the same charges as Binance, but they did get listed in regards to operating as or selling unlicensed securities, operating as an exchange, and operating as a broker dealer. And then a couple of tokens, and all they have to do is get one of those tokens for the SEC to kind of win its case. So what I think is going to happen is they're going to push Binance out of the US. That's the goal. They want to get that out completely. Coinbase will get a slap on the wrist. They lost their golden boy with FTX. They're going to try to bring in Brian Armstrong and Coinbase and still go with the USDC narrative, I believe. So we do have the Fed now, but I still think that ultimately this is just causing a bank run so that the traditional finance, bank, Wall Street kind of money can come in and start to play in this arena. So Coinbase has already established itself. It's going to be now the #1 exchange in the US, and it's the closest thing they have to someone trying to play by the book. So they'll be able to try to pull Brian Armstrong underneath that banner and make him kind of walk the line, so to speak, if he wants to operate in the US. And he does, and he wants to actually play by the book. I think 80% of Coinbase's revenue comes through US based citizens. So I think this is just a play to kick out Binance, remove the whole China kind of tie with CZ, and then ring in Coinbase and USDC, and we know BlackRock and all that stuff is underneath all that as well. So that's how I think it's going to play out. And this is just kind of a sell the news event. So whenever you see this in the headlines, you're already too late. But it has definitely caused an effect in the markets. And what's the last one we got? Oh yeah, this one is actually kind of alarming as well. So the CFTC wins UkiDAO case, setting the precedent that DAOs can be held liable. So what this means is that it sets the precedence that DAOs can be treated as a person under the Commodity Exchange Act and can be held liable for legal violations. This could open doors to future actions against DAOs and decentralized exchanges. So again, like I mentioned in the very, very beginning, we see what the US is ultimately trying to do with a lot of this stuff with the DOJ, the SEC, the CFTC. It's like the alphabet soup gang is really sinking their claws into this unregulated arena. And they're doing it because, as always, they want to control it. So I don't believe they're going to push it completely offshore, but they're definitely going to make it hell on wheels for the people that are in the US, especially if you're trying to operate as like just a free thinking, independent citizen that wants access to sound money. They're going to pretty much try to tie it up the same way they've done with Wall Street with quote unquote, not sound investors. I forgot what that name is, where you got to have like be vetted, $100,000, blah, 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 blah. But anyway, that is the update on the news. We will see how this shakes out. It definitely does not look good as of right now. BNB is down 22%. And obviously, we know in our drip ecosystem, our assets are tied to this. But ironically, drip has not taken that much of a beating from that. So don't see this going that much lower now that the news is already out. And then I could see once this settles, you know that the DeFi crypto space has very short attention spans. So once this is over with, it'll just start to climb back out. So I don't personally see another big leg down, but we will see. So that's all I got. Hope that provides value. If it did, smash that HBO special, help a brother out, like, subscribe, comment down below. Until next time, lift daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? SPRITZ Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.